Hear ye. It is our honor to welcome you to the KingMaker Podcast.
Well, welcome back to, again, Season 2 here at the KingMaker Podcast. This is Keith. Alejandro, how's it going today, man?
Hey, what's up? I'm excited to talk to Crouguer again. It's been a while.
I know. So we got to touch base with some of the redacted folks, and now we're talking again to AladdinDAO, Clever, Concentrator, Crouguer. And so it's great. We always chat with folks before we record, and I think we could probably talk for 10 hours. So we had to hit the record button at some time, so we hit it now. And so welcome, Crouguer. How's it going, man?
It is going great. Thanks for having me back. Love to be here.
Yeah, so where to start? So let's start with this. We're CVX convex-based podcast here. So we've had the unlockening. Last episode was about Clever. And so give us an update. What happened? I saw the TVL definitely went in the right direction, but yeah, share with the audience how things went, and then bridge from our last conversation.
The unlockening was that was a big moment for us. That was a really big moment. I mean, you never really know what's going to happen, right? Like there's and crypto Twitter doesn't really help your nerves much, right? When you know there's a huge amount of CVX coming to the market, and is it going to be dumped? And then when we've got this product Clever that we feel very strongly about, that could potentially be a recipient of some of this CVX, and it was tense moments, but holy cow, it really worked out. It really worked out better for us than certainly than I was even expecting, and I was thinking high. It was a big moment for us, a home run. And we scooped up, 700K CVX in the unlockening, and we really take that as kind of like a validation of the kind of the core idea of Clever, of that product, right? The core idea of basically allowing farmers to take a kind of a quote unquote safe leverage on their CVX, boost their CVX earnings, and then simultaneously in the liquidity pool, provide a way for people to earn real CVX on liquid denominated CVX, if that makes sense, right? Like we're basically connecting these two groups of people together in a way that I think has really resonated, and we saw that in the TVL pump.
All right, so I think I remember back to the first episode, and we're just going to dive right into this topic. It's one of our favorites for Alejandro and I. I think the initial fees were fairly low, and there was going to be some changes over the course of time as things got rolled out.
Exactly.
So what's happened with that? How's that impacted the protocol? What's that looking like?
So the fee picture hasn't changed. At this point in time, a lot of the team focus, there's a lot of overlap between the Clever and the Concentrator teams, and I think we're going to get into talking about some IFO stuff pretty soon here. But at this point in time, the fee structure within Clever is the same as we reported before. So we have I believe it's about 3% now, and we charge that fee on the harvest. So Clever in its current iteration, you can bring your CVX there, you deposit it, you give it to us, we lock it on your behalf, and by the way, we continually relock it. Right? There's no, it's a custodial a solution. I mean, it's all on chain, but it's a custodial solution. So the smart contract automatically relocks your CVX continuously, and then does the whole harvesting, swapping into CVX. Like basically, it automates that bribe harvest loop, which we are not the only protocol that does that, of course. And the fee is 3% on the harvest. The lacking piece in Clever right now, and the sort of the next focus after the Concentrator IFO, is going to be bringing a liquidity pool between the synthetic CVX token, our Clev CVX, and real CVX. And if you kind of imagine in your head what that actually means. So you come to Clever, you drop off, you deposit CVX. It's still yours, right? It's your collateral that you've deposited. And your collateral is earning. and we let you claim your future rewards now, right? So you can claim this Clev CVX, and Clev CVX, like, you can slowly turn it into real CVX as the bribes are harvested. But if you want to take leverage, you need to turn all of your Clev CVX into real CVX right now. Okay? And the only way you can do that is if you can kind of find a counterparty that's willing to give you their real CVX right now in exchange for your future CVX, right? Like, you have to have, like, if you're getting 50% more CVX than you deposited, that had to come from somewhere, right? That had to come from somebody. So that liquidity pool is what makes the connection, right? The liquidity pool between Clev CVX and CVX, that's how, once you've claimed your future yields, you can turn them into CVX today. And so when that liquidity pool gets launched, that's when the fees jump up to 20%. And they jump up to 20% because the person who is borrowing, the person who is getting their CVX, somebody else's CVX today, needs to pay for that, right? You need to pay for somebody to give you their very valuable CVX, obviously. So when the liquidity pool launches, the fee goes to, the plan has not changed, the fee goes to 20%, and that supports the liquidity pool, and it supports the people who are giving up their CVX to you for you to farm with it.
Okay, that makes sense. And what? So what will they be paid in, those who are willing to give up their CVX?
So this is where it's interesting. So the fee is 20%, and that's charged every time a harvest is run. But as we know, the harvest swaps everything into CVX. So you've got this 20% fee that's denominated in real CVX. Half of that is going to go directly to the liquidity pool. So that LPs in that pool will be earning CVX directly. The other half is going to go to token holders of the token that Clever will have, right? So that liquidity pool will be launched at the same time as a new token for Clever. And so the other half of the fees goes to token holders. And there will be a liquidity mining component of those Clever tokens to the people in the liquidity pool. So basically, if you're LPing, like if you bring your CVX to the liquidity pool, you're going to be earning CVX directly and Clever tokens, which are CVX indirectly, right? Like when those are locked, they earn share of the platform revenue, which is also CVX denominated.
Okay, that makes sense. And then, so I'll go here. So what's the tokenomics look? Is this a farm and dump token for Clever, or is this going to be sort of like and we'll get here, the CTR token that has like a fixed amount? Like, what's this going to look like?
Well, there's details that we're not ready to share and that I think are still somewhat in flux. I mean, I can speak to our general philosophy, which is that right now I can tell you that the token, we are big fans of Curve's VE tokenomics. Like we agree with their thesis that you want your governance and your revenue sharing to be aligned with your longest term users, right? Like your people who are willing to take the longest view on your protocol. And so I think it's quite likely that that Clever tokenomics will be similar in that they will be a VE model, and that the revenue sharing will go to the locked token holders. And then again, it's a question of real revenue, in this case denominated in CVX. Like what better what better token to earn revenue in, and you will be able to earn your share of the actual, like the real fees charged on this real product that people use because they want it. So, tokenomic wise, those are kind of the main things that I can tell you. There will be a liquidity mining component because we're looking at compensating people in those liquidity pools. But if I'm farming a token that is entitled to fee sharing denominated in CVX, I don't think I'm dumping it. But
right. So after we get done farming in the IFO with your CVX in that vault, you'll just jump over to the farm your CVX over there with Clever. Is that the game plan? So what's the next protocol you're going to add to Clever? Give us some alpha here.
Well, I would say the next thing that we're adding to Clever is probably going to be
GMX.
Concentrator.
Oh, okay, Concentrator.
Yeah. Well, so Clever is based on, what do you need to make Clever work? You need a token with a revenue, and then you need two different pools of users who are willing to trade time for money, right? One group wants money and has time. One group has time and wants money. That's the kind of the classic setup to make the mechanism work. And there's a lot of really great revenue bearing tokens and investments that can be associated with Concentrator. Part of the reason why both of these products came from us around the same time is that we actually see them both as individually independent, quite powerful on their own products, but there are these synergies and connections between them that can possibly boost both of them really high.
Appreciate you using the word synergy. Thank you for that business.
Do you know
jargon.
I hate myself a little bit every time I say it?
I was hoping you'd even go symbiotic, but synergy is fine.
No, synergies. I mean, for me, it's got to be synergy. My wife works a corporate job, and the words that they use in these calls, my God, synergy apparently is out of favor now.
Oh my God.
Granularity is a good word that they use on those calls.
Yes. Yeah, exactly. And we're going to circle back. Anyway. Yeah. So that's the next step I see for Clever is this sort of symbiotic, I'll use your word, relationship to Concentrator, but there's really no end there. So there are plenty of great tokens that you can imagine that earn yield. That could be a good opportunity for Clever to provide leverage services for farmers.
Excellent.
I'm
looking
really
forward
excited.
to it.
Yeah, so now with Clever, I know we talked about a while ago. We were hypothesizing. I can't pronounce that word. To but ways that you wanted to make Concentrator positive sum, and you include you were saying if you could, you wouldn't dump, for example, the CVX, but at the time you couldn't.
Mm-hmm.
It's exciting that it seems like it's getting closer and closer to that one point in time where finally the two protocols are working together, and in turn actually help out the convex ecosystem. I'm excited for that.
And there's such an interesting thing that goes on there because I think about Concentrator and Clever both in terms of the big picture mechanism, right? In Concentrator, it's the sort of the more positive sum farm and hold idea, and as you said, right now we're dumping CVX rewards to buy CVX curve rewards, and that's not such a bad thing in my opinion, because there is over the long term there's relatively good correlation between CVX and curve, right? They are, speaking of symbiotic, they are very much sort of symbiotic, and I think that they have a pretty high correlation. And the trouble with CVX right now is that there's just no good way to earn while keeping it liquid, right? You get these amazing bribes if you are willing to lock it, but if you need to keep your CVX liquid, there's really not a good way, in our view anyway, there's not really a good way to earn yield, especially CVX denominated yield. So the creation of that liquidity pool and the switching on of that fee structure within Clever creates this opportunity that Concentrator can use, which is let's start holding the CVX, because the users for the most part don't want to dump it, but we can still gain that boost by having that CVX, even though it's liquid, be productive.
I'm actually glad you went to this direction, because I was gonna point this out. So you're saying that Concentrator could keep it liquid, but I'm assuming providing putting the CVX to work in the liquidity pool, earn the fees or the fees that they get back, so they still don't dump it. That's the thing I'm excited about. All these new projects, building all these wrappers and stuff. Everyone is so focused on the wrappers, but just lock it here, custodial this, or which one does what better. But no, what I'm excited about is what the underlying, how it helps. For example, the liquidity pool you're providing, or the liquidity pool for Pyrex, or any other protocol, is like you said, like you could still earn really good fees while keeping it liquid, or like you don't have to, because Cleaver, once you take like a future yield, it gets locked and you can't take it out, right? So there's like you are, by you like providing this product, you're indirectly solving like other issues for the ecosystem. Like that's what I'm excited about.
And you know, we're solving our own problems here. You know, we're scratching our own back on Concentrator because, you know, ideally we don't want to be selling the CVX token, but it makes sense in the context of Concentrator right now. Now, like Concentrator,
it's like there's smart people in crypto here.
Yeah.
Daniel.
Yeah. Honestly, it's like not everyone is dumb or a degen or a complete idiot. No, but
I don't know, man. I think it depends on the day. For me, anyhow.
No, I completely get you, but like, no, because it makes sense why you try to like, how does the saying go? Knock two birds with one stone, or I don't know, but
yeah.
Because with Concentrator you can't have it lock.
Kill two birds with one stone, right?
I think your inner nature's coming out. You need to tone it down a bit. No, I'm joking. But just to clarify, what is the risk of Concentrator actually using the Cleaver product to like put in Cleaver and in like putting the CVX into Cleaver and all of that, just for like the audience, or like if you disclose to the audience like, oh, if you do this, it'll be locked up, or I don't know. Have you guys thought about that?
I mean, it's a very much a do your own research scenario, but we can talk about the risks. Like in terms of Concentrator, we're talking about the CVX that you earn as a reward, right?
Yeah.
And we're talking about how can we hold on to that but still make it productive. Hold on to it, keep it liquid, but still make it productive. So like the first thing to think about is that any change that we would be making on deploying CVX, like on deploying CVX to make it productive, like instead of swapping it to CVX curve, that's only going to apply to that like fraction of CVX that you earned on your principal, right? So we're not talking about principal risks here. We're talking about what can happen because of the way that we're diverting what is actually not a very big fraction of your total rewards anyway, right? So we're diverting this fraction of your total rewards into this liquidity pool. Risks in the liquidity pool would be the same as really any liquidity pool that you go in. If the peg is off, then like the total value of your LP token is going to be reduced by like half of that peg difference, right? And we expect for most of these like synthetic tokens, we expect there will be some kind of a premium, like that the pool will kind of stabilize at some sort of a discount. We don't think a huge one, but there's a lot that we have to like learn by doing here, right? The thing that's maybe unique about this particular liquidity pool is that this synthetic Clev CVX token is, when we talk about it as as representing future CVX yield, that's not marketing. Like it is in a very real way. That's what it is, right? You're borrowing Clev CVX from you're locking your CVX in when you borrow this Clev CVX, but as your underlying CVX yields are harvesting, your debt is going down. It's paying off. So basically that those yields as they come in the future are paying your debt off. And you can, if you have all of that Clev CVX in the furnace, basically you've got a whole bunch of future CVX that is slowly turning into real CVX, right? And when we're talking about the safety of the liquidity pool, you got to remember that like Clev CVX, it really represents future CVX yields, and anybody can buy it if they are willing to take, depending on how many people are in the furnace, if they are willing to take a longer view, like if they're willing to wait for that Clev to turn into real CVX, then they always have that option, right? So it's not a token, in my opinion, like it's not a token that you have to worry about crashing to nothing, because it always like unless CVX itself has a problem, the synthetic should always have a real value as that future yield, right?
So as a retail investor question, one of the things that I loved about Ohm back in the day was all the spreadsheets, all the ways you could sort of calculate where things were going mathematically, sort of see what would happen if I lost 90% of value and how long would it take, blah, 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 based on different factors there. Is there any like spreadsheet type calculations to say if I deposit my CVX and I lever up to 2x, how many years it will take to, based on the yield and all that? That was something I was trying to personally calculate, and I'm just not smart enough.
I mean, there's a fairly trivial example, which is if you assume, for a long time. Now, again, we're in a little bit of a different regime here, but the two key numbers that you need to be aware of are the LTV. That's basically how much future yield you're allowed to claim against a given deposit, right? If you're thinking of it in terms of borrowing, it's like compared to the collateral, how much are you allowed to borrow? And for Clever, that's 50%, right? And then the second factor that you need to look at is the APR of your collateral. So if your collateral, if CVX is earning 50% per year, and you borrow 50% today against the value of your collateral, you can expect your debt to be cleared in 1 year, right? If you lever up, you're continually reborrowing, right? Every time a harvest happens, you can borrow more, right? Because your debt has been reduced to the system, which means that now there's a little bit of space. You can reborrow, and you can pull that, and you can pull some more Clev CVX out, swap it into CVX, and redeposit it. And so, if you want to maintain a 2x leverage continuously, that's what you have to do, right? You have to reborrow each cycle in order to maintain that exactly. I mean, again, you can't get exactly 2, but you do have to do this like re-upping. Now, you don't have to do it every single cycle, but over time, your leverage number drops, right? If you imagine the case where you just borrow 50% one time and then redeposit it into Clever and then just wait and watch, then what happens is your earning rate starts 50% higher than it would, right? Because now you've just deposited, like you just borrowed 50% and swapped into CVX, and now you started with 100 CVX, now you've got 150 earning, right? And so if you do just that, and then you sit and wait, on day one, you're earning 50% more than you would have otherwise, right? And then on day two, your multiplier, it's dropping down until you choose to like reborrow and re-up. And so, over the course of a year, toward the end of that year, you'd still be making more, right? You still have that like higher leverage, but it's not going to be as high as it was on sort of day one unless you keep sort of re-upping.
That makes sense. So essentially, if you go to 2x and you're making 50%, just in round numbers, just to be super simplistic here, and you're not continuously borrowing, essentially you're looking at about a couple years to get there.
If you just borrow one time and your deposit's earning 50%,
right,
and you loop it, yeah, but if you don't reborrow the second time around, right, you just do one, then it's 1 year, right? If you earn 50% in a year, then in 1 year it's done,
gotcha.
Right? The more you loop it, like the thing is, if you reborrow halfway through the year, you reset the clock, right, and now it's a year from that point. So if you maintain maximum leverage, then you always have a debt to the system, right? Like it never pays itself off if you keep borrowing, right? And that's, so if you want to get the most out of the system and you're reborrowing constantly, you are relocking constantly, right? And so you're basically always maintaining that whatever 1 year or whatever timeline every time you choose to re-up that way.
Yeah, I was way overthinking this. I was thinking about bribe amounts in cents versus CVX price and of all these things rather than just looking at the APR.
I think easy to look at the APR, but like the APR, there's no guaranteeing where it goes, right? Like if the APR falls by half,
right,
then that doubles the amount of time that your debt is going to take to pay itself off, right? You can always clear it. Like there is like you can pay your debt off manually, right? If you like you're only locked as long as you want to continue holding what you borrowed, right? You can pay it off, right? There's there's like some nominal fee associated with early, like with paying it, with like wiping out your debt early. But you always have that option. Like you can get your CVX out, as soon as it gets to its next unlock cycle, you can withdraw it out as long as you clear whatever you owe the system. So it's not like you're trapped for 2 years. You've always got an exit. But it's if you want to keep that leverage level, then you do have to like maintain that level of borrowing, which keeps you locked.
Okay. All right. So Clever here. This has been the appetizer. Now let's just move into the feast. In your initial feast offering, your IFO. Full disclosure, I have dipped my pinky toe into this whole IFO experience, so I always want to put that out there and be transparent. But what in the world is going on with Concentrator? It's exciting to see all the content that's out there, but break it down. What's this been like as you've had this IFO going, and what in the world is an IFO?
Yeah, so this thing with Concentrator, this is where the team is laser focused on this right now. This has been a big move for us. And basically what we are doing right now, Concentrator has been running very, very nicely. We amassed a quite sticky and very respectable amount of TVL, and then through the whole market capitulation, obviously the total TVL dropped as the market prices dropped, but not anywhere near, we peaked around 70. And I think, we still held 50, this is pre-IFO, there was still, 50 million TVL locked even through all these capitulations. And so right away, we look at that again, speaking of validations of the product, we look at that as a really big, the Concentrator keeps doing what people expect it to do, and it works in any market condition. So that's great. And now this IFO is a moment when we are taking Concentrator. Remember, Concentrator has been basically incubated and grown by Aladdin based on these Aladdin principles, and it's time to sort of democratize ownership. It's time to set it free, right? And so what that means is we are issuing a token, a CTR token, and that token is going to represent governance power, and it's going to have a claim on revenue sharing. And so Concentrator, again, being a product that has real revenue and real users who are willing to pay for the product that's being offered, it is like what I would call a good business, and it's what we want to share with the community in order to grow Concentrator even bigger. We're kicking off this plan of getting these Concentrator tokens into the hands of our community, and we made a whole bunch of I think fairly unusual decisions with how we were going to issue this token, all in the name of doing this Concentrator initial offering in a unique, but in a very fair way, right? In a way that doesn't involve any kind of pre-sales or no VCs, no all of that kind of stuff that is a big part of how a lot of tokens get launched. We tried to stay away from and keep it completely user driven and completely community based.
So before we dive into tokenomics and a little bit more there, just step us through how you get involved with the IFO. My understanding is you go to Curve, you deposit, you get LP tokens, and then you put those in the Concentrator into the vaults there. You call them vaults or furnaces? I forget.
Vaults. Yeah, generally. So I guess it's worth mentioning right now, Concentrator before the IFO, you deposit your Curve LPs, as you say. And by the way, you can zap in to all of these vaults, both in the IFO and in the original vaults. You can zap in easily, so you don't actually have to necessarily go through the trouble of doing the Curve deposit first and getting those LPs. You can go straight in with a lot of common assets, right? Like your stables or ETH or depending on the vault, you can zap straight in with Curve or whatever. And the pre-IFO vaults that are still around, they're called the original vaults. What happens is we harvest everything, all the rewards from that, we concentrate them into aCRV, right? aCRV is just a staked CVX curve. So it's auto-compounding CVX curve. So this aCRV token that we've made, it just represents a big pile of CVX curve that is staked on convex and that is earning and automatically compounding, right? You hold one A curve and it gets bigger and bigger and bigger over time. It represents more and more and more CVX curve over time as the auto compounding works in the background. For the IFO, the vaults work exactly the same way, right? If you go to the Concentrator website, you'll see there's IFO vaults and then there's original vaults. And the IFO vaults work exactly the same way. Ultimately, you're depositing a curve LP, but you can zap in with a common asset. It's very, very easy. And then that curve LP gets staked on convex where it earns all these rewards. And those rewards are harvested into A curve again. But for the IFO vaults, you give that A curve up to the Concentrator platform in exchange for Concentrator's token, the CTR token. And one of the really unique things about this offering is that the price is fixed and it's the same for everybody. It does not matter. It doesn't matter. You can't boost it by being a whale. There's no way to get CTR from the primary market except by farming it, and the price is the same for everybody. One CTR for one A curve. So in the IFO vaults, from the user's perspective, you deposit into them and then you see your balance of CTR, your claimable CTR just increases over time. And that's it.
Okay, so I'm going to hit the pause. So first off, what is Concentrator going to do with all the A curve? What's the mission here? And then the second question is, as that CTR accumulates, as a retail investor, what's the best play here to harvest and then put those CTR in that LP pool or vault?
Okay. Two good questions. Let's start with the second one. So, and this one, we're going to have to get into the weeds a little bit here. So buckle up.
This is where I need your help, Alejandro. I don't understand this. So help me with the technicals here.
Okay.
All right. So we made a very unusual decision, relatively unusual decision, which is for this token launch, we are only providing liquidity and only incentivizing liquidity in a weighted balancer pool. And the weighting is 98% A curve to 2% CTR.
Yeah.
So what that means is that there's a small amount of CTR liquidity, right? As a fraction of the total liquidity, it's only a small amount. So that has impact on the CTR price. It makes it a little bit more volatile. But the key benefit to this is that people who want to farm CTR using their A curve can LP into this pool, and they really won't have to worry about impermanent loss. Okay? Remembering that like impermanent loss is when you've got like two equal pools of tokens and the prices diverge, then if the price of one of them is really, really volatile and it like drops, for example, then the total value of your LP drops really badly too. So I don't know if you guys have ever participated in like a liquidity pool for an early token. I have, and it's generally very, very painful. Basically, typically what happens is, these protocols will launch a deep 50-50 liquidity pool right at the start of of however they are like issuing their token. And somebody will come along and buy a whole bunch before anybody has started farming at all, pump the price and create this like sort of euphoric price pump that skyrockets the price, and then that early buyer just turns around and starts dumping, right? And so here's a player that is like 100% parasitic to the system. They're coming in, they're making the price more volatile, and then they're harvesting they're harvesting that volatility for profits without having helped anybody else. So the benefit here is that, first of all, liquidity providers can LP into this pool, and the value of their LP 98% tracks A curve, right? So our LPs just don't have to worry about the volatility of the CTR token. Now, the flip side of that, and this is why I bring this up right now, is that if you farmed your CTR right now, you don't want for that kind of a pool, when you deposit that CTR into that pool, you are de facto selling your CTR for A curve, right? Because what's happening is you're putting in CTR into the pool, but then what you get back is an LP token, and the LP token is mostly A curve. So if you want to be able to capture any upside for CTR, and if you want to, especially thinking again, if you want to be holding that CTR long term, providing that into the balancer liquidity pool is not a good play. So that's like an important one.
I'm glad that you actually went a little bit into this, because I know you said like one of, I guess, the main points is that you guys took a really different approach to the whole process. But like that's one thing that I've been seeing comments about in like crypto Twitter and like Discord servers, is that like the balancer pools, that was, at least I don't, in like the 1 year and something months that I've been in DeFi, haven't seen something like that at least yet, at least from one of the projects I follow. And that's something that like I'm glad you went a little bit further, because people like, at least right, like looking at it, it looks really weird, but like when you explain the logic behind it, like it makes sense.
Yeah, I mean, the name of the game, number one, with the balancer pool is to protect LPs, right? And also, you know, to step back, like it also kind of smooths out, you know, it makes that like arbitrage play that I described earlier, it makes that not profitable. And so it kind of keeps the, you know, when you're very first releasing a token into the wild and nobody has any yet, and the only tokens that exist are the tokens in the liquidity pool, that's when you can get all of these silly games that manipulate the price, and that, you know, they're really very damaging to the protocol, as well as to the people who want to come and, like, if you think about it, you see the protocol, you like what they're doing, you believe in their mission, you come and you LP, and you don't realize that there's this like third player that has already sort of like de facto swooped in early, taken up a huge amount, you know, pumped the price up with a big buy, and is just waiting to dump on you. It's not really fair to anybody, right?
That's called a VC, right?
Well, yeah, I mean, the VC is arguably, it's one step even further than that, because typically in these VC deals, they're getting access to special pricing on tokens before there's any liquidity in the market at all, right? So you know, first the VCs take their cut, and then those like arbitrage early buy plays, they take theirs, and it just ends up being pretty ugly. I've been involved in a couple of these, especially when I was newer in the space, and boy, those are expensive lessons to learn, right? Like, impermanent loss isn't really all that impermanent if you buy just after the token has pumped. You know, there's just so many things that are ugly about how that ends up going that we're trying to avoid here. And there's a trade-off, of course, right? Because what it means, a couple of things. Like, first of all, to your question, Keith, it means that you can't LP back to that pool with the CTR that you farm and still hold the CTR, right? Like, you don't get to hold that like 100% exposure to CTR if you're in that pool, because you immediately are mostly holding aCRV when you LP, and so you're kind of de facto selling it back whenever you LP.
And with CTR at a slight premium to aCRV right now, depositing your CTR would be an automatic arbitrage in the other direction, an immediate loss.
Exactly. And then, you know, depending on how that evolves over time, you know, you're basically selling your CTR for aCRV, right? It's kind of funny. Like, I joke sometimes internally on the team that like our biggest challenge is that we're basically competing with ourselves here, right? And aCRV is just such a great token. And we need people, you know, when we're talking about the IFO, we're trading people CTR for aCRV, right? But aCRV is a really great token. so we're sort of competing against ourselves here a little bit.
Nah, but I understand. And it sounds like, so when you deposit into the LP, you're basically going into majority aCRV, and it's really hard for you to dump the token. So realistically, for any audience members that wants to hop into the IFO because it's not over yet, they should be like, would you say it's accurate that once you're in, you have the CTR tokens, like, since it's hard to dump it, and if you deposit into the LP, you lose. Well, you lose it. Well, it sells to aCRV. The best thing to do is just hold CTR on your wallet, and there's nothing much you can do without losing some value of the token.
At this moment, that is correct.
Okay.
The story here, like the whole thing is crafted to be the best way to get aCRV is to farm it. That's what we have tried to create, right? We want to give, sorry, not aCRV, CTR. The best way to get CTR is to farm it. We want to give part of the name of the game here is getting our tokens into the hands of real users, right? Of the people who are actually farming. So when we have this, like one of the side effects of this unbalanced, this weighted balancer pool, as you say, is that it's hard to dump the token. That's actually not true in small amounts, right? There's a couple of $1 million, I think. I'd have to check the most recent numbers, but like there's a fair bit of liquidity in that pool, even though only 2% of it is CTR. You can sell small amounts of CTR to the pool without horrible slippage. If you want to, like if you're farming small amounts and selling them, what you can't do is show up with $200 million of mercenary capital and farm it into oblivion and dump it onto that pool, because there's just not enough liquidity to do large scale dumping into that pool, right? And so one of the kind of hopeful side effects of limiting that liquidity on that CTR, at least in the earliest stages of the IFO, the initial plan is to continue that throughout the whole IFO. There's some kind of discussion going on in the community right now about whether or not we might want to deepen liquidity with a curve pool before the end of the IFO. That there's nothing decided there yet, and that's going to be a big sort of community discussion. But as with the current plan, that's going to just continue throughout the IFO, and so it just kind of creates this situation where the mercenary capital that would come and farm and just dump at a quick profit, it's not really viable for that crowd, right? Because of the small CTR liquidity.
No, yeah, I completely understand. Like, I would just make it sure for the audience members, because not everyone is gonna be a whale, so that in case they, like every degen likes having options and trying to having their things like at least somewhat liquid. One
Absolutely,
thing that
it's a trade-off.
Yeah.
No, I guess one thing I'd request though is nobody else get in on this IFO, because you will dilute me. So, in the little bit I have there, so could you help me with that, Crouguer and Alejandro? Like, we don't want anybody else to get in.
Well, this is the challenge, isn't it? Now, what's interesting is that you can the way that you get diluted in the IFO is that it ends sooner. So one of the features that I didn't kind of mention is that because of the fact that the CTR is always given, like, so it's always like one CTR for one aCRV, and it's a fixed number of CTR that we are emitting, right? It's a fixed amount of aCRV that we're raising, and that's 2.5 million. What it means is that the variable here is how long the IFO lasts for, right? Everybody can come and into your pool right now, and you will still earn the same today, right? You can't be diluted by other people bringing LP into your pool, right?
Correct.
You still get one CTR for every one aCRV. But what can happen is that if TVL grows a lot, it will mean that the aCRV gets raised sooner and the IFO ends sooner. So that's the way that you get diluted.
Right. So last time I checked, it was like 93 days was the estimate. So if people could actually pull out, that would be good to lengthen the amount of time I can be in. So could we reduce the TVL and increase?
It's incentive misalignment. It's a classic incentive misalignment problem, because I would love that too. I would love some more CTR, but I also recognize. I mean, we're joking, but part of the name of the game.
I'm definitely not joking. You might be, but I'm not.
I'm joking because for CTR, like for Concentrator, the protocol. A big part of this, like obviously, we're democratizing ownership, we're bringing the community in, but this is also meant to be a bit of a push, right? We tend to think that the Concentrator, like farm and hold mindset, is just so obviously superior to farming and dumping that a lot of compounders are doing still with a lot of TVL. We tend to think that it's just so superior that like it is clearly the better option, but there's this like momentum, right? There's this like inertia that people have to get over, because like migrating your LPs is a pain in the butt, and you have to like do your research, and you have to double check, and you got to check our audits, and so sometimes you need a little bit of a push to do that, right? And so the IFO kind of provides that, because we are issuing what we think are going to be very desirable tokens, and we're doing them for a limited time to farmers only. And so anybody who sees the value of CTR, that maybe can provide that push, that impetus that they need to come over and farm. So that shortens us down. But it also, Keith, it also improves the earning of the CTR that you are farming. Huh?
I don't care about that right now. We can worry about that later. And when you launch the Clever token, can it be an ISO, an initial synergistic offering?
Oh my god, all this fancy stuff.
I think that as much as you and I would love that, I'm not sure we could sell it, but we should try.
We'll do a whole podcast on it, and all 10 people that listen to this can it'll
All
be
10
huge.
people. I would like to think
it'll be
we
amazing.
improved over the last 3 months. Like we at least have 20 people at least.
Okay,
listen to
20.
us.
Yes.
Well, I listened to my own podcast like 15 times. That might have.
Yeah, that
put your
skewed
numbers
it.
up.
So it's 5 people, Alejandro.
Damn, I get you. Never mind. But like talking about Clever, I can never pronounce that name. I'm glad you went in that direction. Is because actually wanted Crouguer's take on this. So you were saying that product you unlock future yield, and then you dove deep into like how you could get 2x and you explained that the mechanics behind it. But one thing I wanted to point out is that we did do a podcast with Redacted last week, and they are planning to launch to what they call hard mode for their PX CVX, and it is gonna go into the same like idea or concept, unlocking future yield or at least or like future bribe revenue or etc. Like as your take as the behind the builders and Cleaver, I don't want to put you head to head against Redacted because I think all of us can rise together, but I wanted your takes to see. Because a lot of people rap put Pyrex, the Aladdin team, and then Badger against each other, even though you guys have, at least in my opinion, different projects. Do you consider it like a competitor doing like a similar project to you, or the way that you or like the team would see it is like they're doing something different for the audience? Because at least they're using a lot of the same terminology as you guys are.
Yeah, I mean, my sense is that like functionally they're quite different approaches. And I mean, I'm at a bit of a disadvantage here because I don't have probably as deep a knowledge of the Pyrex approach as I maybe should. But certainly one of the things, like, we are competitors, quote unquote, in the sense that we are both ways that you can use your CVX, right? Like there's only a certain amount of CVX in the world at any given time, and so if you're looking for things to do with it, you can't do both. But beyond that, I don't really think so. I mean, the Pyrex stuff, the hard mode stuff, from what I've seen, is some really interesting. Like futures kind of swapping, and I really hope I'm not butchering this. Whereas, like, one of the problems with listing Clever and like Badger and Pyrex is that Clever is not a liquid wrapper. Like Clev CVX is not a liquid wrapper of CVX, right? Like, you don't get Clev CVX back when you deposit real CVX. You borrow. You borrow a small amount against a small amount. You borrow up to 50% of your deposit, and like I say, that represents future yields, but not tagged to any specific harvest, right? And so if the earning rate of CVX goes up, then your quote unquote debt to the system is paid off faster. If the earning rate drops, it's paid off slower. But in the end, that Clever CVX token represents CVX over time, right? Like Clev CVX can always be turned into real CVX 1-to-1 by using the furnace. The only variable that we can't predict is how long that will take, right? How long that takes depends on the earning rate of CVX. But Clev CVX is really actually future CVX, right? As long as CVX is producing. So, when people talk about it as a liquid wrapper, it's really not. Like, holding Clev CVX doesn't like entitle you to some constant income stream, right? It is itself a representation of future income. There's a weird subtlety here that it's a real challenge to communicate, I think, right? Especially because there is a lot of demand for liquid wrapping in general. People see that, they have to lock their CVX, they have to lock their curve. And like, you know, CVX curve is maybe a good example, right? Like here's a liquid wrapper for locked curve, which is even more illiquid than CVX. And so, you know, with CVX curve, there's a huge factor is the peg, right? How's the peg doing? Like how close does the liquid wrapper track to the real thing? But it's not redeemable. So the peg is actually really important for CVX curve. For clever CVX, you know, which people have a tendency to say, oh, it's a liquid wrapper, so like let's talk about how the peg is going to do. It's not the same dynamic because it is redeemable. It's just redeemable over time. Like you're trading time for your liquidity. And so, you know, in terms of like Pyrex in particular or a Badger, you know, I won't get into any detailed like point-to-point comparison, but I definitely think that there's a misunderstanding about what Clev CVX is and what it is in sort of the general understanding of people. And I think that once you kind of get your head around that, you see that it's a quite different project than a lot of sort of more liquid wrapper focused projects.
And after the ISO, the initial synergistic offering, people will get it more, I think.
I think so.
I think.
Well, I mean, that's.
Well,
go ahead.
Well, I was just gonna say is that the mental, like a mental model, if you want to use to begin your research, is that try to see it in the perspective. It sounds like tell me if I'm wrong, but it sounds a lot like Alchemex. At least if you try to see it in the way that Alchemex like works, at least a little bit, that's a good mental model to begin as you do your research. It may help you begin understanding better. At least that's the approach that I took. Yeah.
In terms of like understanding the model, Alchemex is definitely a better place to start than with any of the other sort of liquid wrapper type things.
Yeah, exactly.
Yeah.
Cool. All right. So what are you going to do with 2.5 million aCRV?
That's a good point.
So step one. Now again, we're talking about Concentrator here. This is a protocol, and I'm going to beat this drum again to death. This is a protocol with paying users and real revenue. The CTR token, as it's emitted, has no allocation even for the team. There's a small treasury reserve allocation, no pre-sell, nothing like that. So step one is that the protocol is, first of all, raising aCRV, and second of all, earning aCRV through revenue. And some of that is going to be just like operational expenses, right? But primarily the name of the game with anything that Concentrator is holding, at least the way that I sort of conceptualize it, the name of the game is growth. And so step number one, and the most obvious place, is we want to take aCRV and we want to move it cross-chain. So there's a very specific reason why aCRV works the way it does. So I mentioned already aCRV represents compounding CVX curve, right? So your one aCRV represents an increasing pile of CVX curve, and you can always redeem it for however much CVX curve is backing each aCRV. Like it's fully redeemable at any moment. And you do that on mainnet at the Concentrator contract, right? You basically wrap and unwrap the CVX curve in the background. And so because that aCRV uses this index that's increasing on mainnet as opposed to something like a rebase mechanism, it means that the aCRV token can be bridged cross-chain, and it's still growing, right? Like one aCRV represents a growing pile of CVX curve on mainnet, whether that aCRV is also on mainnet or whether it's on Arbitrum or Polygon, right? So step number one with the aCRV that we're raising is we're bringing significant aCRV to other chains where CRV emissions are happening. Now, it's actually kind of a big deal because a lot of these chains, they're like, you know, Curve has got this incredible like multi-chain strategy. We've got cross-chain gauges now, and there's a significant amount of CRV being emitted on non-mainnet chains, but there's not a lot of yield opportunities for CRV. So really, all of the CRV that's being emitted on these other chains, in many cases, all it's good for is dumping, right? People are just going to, you know, sort of dump it to maintain the peg. And so by bringing aCRV to these other chains, we give people a productive thing to do with their curve, right? Swap your curve into aCRV, and then you can just hold aCRV on the other chain where you're at. And it's going to be the equivalent to holding aCRV on mainnet, except that you don't have to pay any mainnet gas fees, right? Arbitrageurs will keep the pool in balance, since you can always wrap and unwrap aCRV on mainnet. As long as there's enough liquidity on these sidechains, it should be a really good experience. And in fact, we already deployed the first batch of aCRV liquidity onto Polygon just yesterday.
Alejandro, it's like smart people work in crypto.
No, yeah, it amazes me how smart people are, and not everyone's an idiot. No, but like they're actually doing something smart, because right now at the moment I have done research, that everyone knows. I think everyone knows that obviously I'm huge into CVX, Curve, and FXX. That like the main ways to at least like earn yield and or try to make money on the Curve is in Polygon with KeyDAO. Besides that, there's nothing really else you could do in like besides them. So there and KeyDAO, obviously the only place you could do is on Polygon, and that's through, and with them you have run the risk of getting liquidated and etc. So this is providing a way that people can actually live an L2 life, and they don't have to deal with mainnet, they don't have to deal with the fees, and because right now it's cheap. Right now it's like ways like 10, 3 sometimes, because we're in a deep bear market. But we all, the people who's been here for a couple of months, remember how expensive it used to be in the bull market. So you're providing like a really good solution, so people like are tired of mainnet, they can still invest without actually having to deal with all the mainnet fees and everything, and just live an L2 life in any chain that they want, which I think is really interesting.
And we feel so strongly about this. Like, we feel really strongly about this because two things can be true. One, and actually in many ways they kind of self-reinforce. The first thing is that like Ethereum is we can talk, I don't want to get into the weeds here, but like in terms of DeFi, Ethereum is the king. There's no question, right? And the core protocols that are competing to be that fundamental, like those fundamental building blocks of DeFi that are residing on Ethereum. I mean, it's quite fundamentally unfair that you can't, as an early user who's not coming with a big stack, you really don't have the opportunity, even if you have the information. Like, even if you see what we see, and you look at Curve and you think like, we think that Curve is a very, let's put it mildly, a very strong long-term play. But I can't do it in a way that is profitable because of mainnet gas fees, right? Like, it's this kind of catch-22, or not catch-22, it's just this unfair like aspect. And so for us, aCRV provides a way to get like legitimate access to the real, like, to Curve, to Convex, to that ecosystem that really is primarily a mainnet. To get access to that, now it just makes things more fair, right? It means that now even if you're not a whale, and even if you can't like tolerate mainnet gas prices, you still have a chance to play that mainnet game a little bit, right? And to benefit from what you see.
Yeah, and I think one thing that people, because I'm into like different communities, and I know some people are gonna like, I can already hear the audience like throwing some like counter arguments or like critiques or everything. But you have to remember that building takes time. So right now they're gonna get this liquidity and provide deep liquidity on different chains. But then I'm assuming over time you're gonna like partner with people and like provide lending for aCRV and in all these start building more and more of the Concentrator ecosystem, and not only mainnet but then other locations as well, because right now you have Cleaver, but at least that's the way I see the direction of aCRV going, that like you partner up with people, and it doesn't have to always be your product that you're building. You get to partner with a different DAO and
Alejandro, like you see it very clearly, right? The one first step in terms of bringing Concentrator bringing Concentrator to the next level, growing, is making aCRV into a capital A asset, right? And what that means is, first of all, making sure that there's the step one is liquidity, right? Without liquidity, you've got nothing. But then step two is utility. And so the types of things that you're talking about, ways to use aCRV as collateral and just like start to make it more composable with more different parts of DeFi, which doesn't have to reside exclusively on mainnet, right? Like aCRV can be the engine that pulls some of that mainnet value to wherever it is that people need it, right? It has that it has that property if we can develop aCRV, the asset, to that point. And so, you know, it's really kind of a win-win situation here where, you know, the curve emissions on all these other chains, you know, we provide this easy way for them to earn, and then we're also getting aCRV into the hands of people who are then going to be looking for more ways to use it. So it really is, you know, there's really a constructive flywheel effect, just a small one within that sort of asset.
Synergies.
Is there going to be like a reward for who uses the word synergy the most by the end of the podcast?
There is. Well, it's paid in aCRV.
Thank you, Crouguer, for the nice donation for our wallets. Nah, but the good thing is that as you know, I'm actually excited because the one good thing this is indirectly like has to do with Concentrator, but like since I also do this podcast but I also work for a DAO, it's interesting that like I could like talk with you and like hypothesize and everything, and then like I could like, for example, I could help you be a part of your journey, not only as like a podcaster help spreading the message and information and stopping misinformation, but I could also like try to help the growth of your ecosystem as well. At least I'm saying from like my personal point of view as like the locations I am in crypto. That's
and
exactly
which DAO do you work with, Alhanio? Put a plug in.
Oh my god, yeah, vendor finance is gonna be launching in a couple of weeks.
And they do lending, right? Interesting. Okay, cool.
Fixed rate, fixed rate lending. Yeah. Yeah, basic. Yeah, like
on other chains. On other chains, right?
Yeah, we do Arbitrum, so we do fixed rate, fixed term lending.
Okay, all right.
Yeah, basically, I'm not a whale, so like I cannot. Well, I could put like $1,000 and it's probably get eaten up right away, but but yeah, that's something. It's just I didn't directly meant to like shill the project, but like I'm doing it genuinely because like it's cool that I can see if I could have an impact.
Well, and I'm doing that a little bit to be humorous, but also I always want to be transparent. Just make sure everybody knows like all our cards on the table. They don't necessarily need to know where things are going, but I always want to make sure everybody's clear on what we're connected with.
Nah, I get you. No, 100%.
Fair enough. And I mean, that's a big part of the way that we try to play at Aladdin and at Concentrator is just extreme transparency, right? Which, you know, as much as the industry is based on the transparency of the blockchain, the way that the individuals and protocols have often worked is maybe not so transparent. So I think there's lots of room to sort of lead by example there. And I guess to your point earlier, Alejandro, like, you know, there's like multiple selfish reasons that Concentrator or any protocol would have for doing this kind of like token emission event, right? And the holy grail really for a protocol is to get your tokens into the hands of your users, the people who like have that strong alignment of what is it that this protocol is meant to do. They're going to get rewarded if the protocol is successful, and they are in turn, and here's the selfish part for the protocol, they are in turn going to help support in many, many different ways, right? You talked about the obvious, like, you know, spreading the word and talking and like what you might call the like organic marketing side, and that's important, but like there's also, as you say, the idea contribution side. Part of why, you know, I can talk about our initial like first order plans of, you know, we've got this pile of aCRV, we're going to be building liquidity on other chains, and we've got this really strong story as to why that's great and why that's going to help. But it's really just step one. And step one is, you know, kind of the first thing that's been sort of inherited by Concentrator from the team. And the team, of course, has lots of really interesting ideas about where we go from here. But over time, as the community becomes more and more involved, we kind of expect that a lot of ideas and feedback from the community are going to drive Concentrator's growth, right? Like the whole idea of offering these tokens is to grow Concentrator in every way that we can, right? Like attract additional TVL, attract more stakeholders who have more of a more sort of an incentive to sort of support and help and promote the protocol, and then also attract, you know, the community brains that can come and sort of show up in the forum and pitch different ways, like different big picture approaches, different strategies, if you will, for how to continue growing, how to like continue to push sort of Concentrator bigger and bigger. And that's true of every DAO, right? Like there is supposed to be some value that accrues to the DAO from the fact that they have a big community.
So let's we're getting towards the end here. So let's pivot into a couple things. On first, talk a little bit about the tokenomics of CTR,
Sure.
2.5 million, and then we'll let you give one last final shill on why people should not get into the IFO.
All right. So the story of CTR, the tokenomics, is meant to be pretty straightforward. There will be 5 million tokens in total. 50% of those, actually, if you count the balancer pool, more than 50% of the tokens are going to be released during the IFO and sold for 1 aCRV each. Okay? Apart from that, there are small allotments for our community booster program, which I should plug, and our the liquidity mining in the balancer pool, and some reserve for the treasury. Apart from that, there is a 30% allocation to Aladdin. Aladdin being the like source of the resources and basically that incubated the Concentrator protocol. And, you know, zooming out to the big picture of Aladdin, you know, Aladdin wants to own great properties, right? They want to own big pieces of great properties. And so this is kind of step one. You know, if you can't buy the great property, you build the great property and you still have your big chunk of ownership. And so 30% is directly assigned to Aladdin. Now, the Aladdin allotment, I guess I'll start there. Aladdin is going to, and has in fact already, immediately locked their entire allotment of CTR tokens for the maximum duration. CTR works on a vote escrow model, same as Curve, so it's a 4-year lock that you have to relock in order to extend out to get the maximum VE power for your CTR tokens. So Aladdin tokens are instantly maximum locked 4 years and continually relocked. And then whatever revenues accrue to those tokens will be shared, whatever revenues accrue to the CTR tokens will be shared with Aladdin token holders, and Aladdin token holders will control the governance power of the CTR allotment of Aladdin. The 50% IFO, that's basically, you can use that to calculate a valuation for the protocol. And I'm not going to get into like price discussions here, but I would suggest anybody who's looking at Concentrator and trying to decide what the token should be worth, one way to look at it is to look at sort of the TVL and the revenue versus the fully diluted value. And remembering that because there is no ongoing emissions, over the course of the IFO, all of the tokens will be emitted and there won't be any ongoing emissions after the end of the IFO. That means that you don't expect any selling pressure to come after the IFO is over, right? All the tokens are emitted, Aladdins are instantly locked, and then the farmers will do what they choose with theirs. They can also lock theirs, and vote-locked CTR tokens, the VECTRs, will earn half of the platform's revenues. And there's a little subtlety there that I want to mention as well. Right now, the plan is, as soon as the IFO is over, we're going to switch on the VE model, and then there will be an initial vote to enable revenue distribution. And we may toy with some ideas at that time of will we give all of the 50% that is allocated by the token. I'm expecting that token holders will vote to award it to themselves mostly, but there may be appetite in the community to award some fraction to like public goods funding or something like that. But
KingMaker.
The important thing, well, and I mean, it might be something like Gitcoin, which, you know, I know that you guys worked through the Gitcoin grants process before. So if we're the key here, and what we think might be important for people in some jurisdictions, is that it might be important that it's a community vote that turns on the revenue distribution. It's not baked in until the community chooses to enable that, right? It's not like a central decision that will do that.
So one clarification: you said that the 30% that AladdinDAO holds has already been locked, but then you said like it'll get turned on after the IFO for everybody else. Is that correct?
Yeah. Well, basically the locking doesn't really give you any benefit at this point in time, right? If you, I would have to check. I don't know if I don't have the particulars of the details, whether or not it was like the lock was done by a whitelist just for this address or not. But there's really not a great benefit at this time. Again,
it's more of a good faith action by AladdinDAO.
Yeah, exactly.
Right.
Well, and it's a proof, right? Like we have locked it into this contract where it's stuck. We want to make sure, as you say, it's a good faith action, and it's also just kind of putting our money where our mouth is, right? You don't have to trust us that I mean, you don't have to trust Aladdin that they're going to do what they say, because it's already done and it's on chain.
Gotcha. Okay.
No, I completely understand.
It's another place where the no pre-sale thing becomes a pretty big aspect, right? Like you don't have to calculate when the unlocks are happening. Like there are no unlocks, right? There's no sort of a future event that you have to play, right? This is really, the attempt here is really to make a simple, valuable token that like meaningfully represents ownership of, or however you want to conceptualize it, of Concentrator.
And with AladdinDAO holding governance of 30% of, I guess, it's 30% of 2.5 on the other side, or 30% of the total 5.
It's 30% of the total 5.
Okay, so there's a gigantic voting block there.
Exactly.
So let me ask this: looking at people depositing, is there any like extremely large whale that's deposited that could maybe take on getting 30+% for themselves in this IFO?
I do not think so, but I can't. I don't have the sort of the insight to be able to answer that very well.
Three arrows got in to try to IFO.
Oh my god.
Well, I mean, they asked us to loan them a bunch of money, so we loaned them some. They said we're going to get a good rate.
Perfect.
Oh my god.
Alejandro loves my Celsius and Voyager and Three Arrows comments.
No, I love it. It's just after everything that got on, it's just oh my god. Like, but what? Nah, just.
So you all actually had to pivot. You were set up with Three Arrows, and then after this, you had to move to this IFO. Is that correct, Crouguer?
Yeah, that's right. That's exactly correct.
But like, oh, I'm gonna steer the conversation back to not directly responding to Crouguer, but to you, Keith. The main sense is really hard to dump. The main benefit why a whale or a DAO would participate is, yeah, they see potential CTR, but the main threat is that they have a lot of governance power in the DAO, which is not necessarily a bad thing depending on who it is, if they do decide to take the risk.
Yeah, that's what I started getting at. I was just curious to see if anybody was taking that a governance approach of, all right, I got to compete with that 30% share of AladdinDAO, but I'm going to own 41% or something. I
mean, it's always possible, but it's also kind of difficult to say for sure anyway, because a person like that could easily hide behind like multiple addresses or whatever. I mean, I guess what's important is that nobody's able to buy that governance power for cheaper than anybody else.
Yeah.
Right. You don't have a huge governance block that's associated with somebody who paid like 10% of what everybody else paid for their tokens. So whatever sort of fundamental fairness that benefit that gives, that's kind of I think arguably a good thing.
So how much has Sifu put in on this tracking as well?
I mean, from his main address, I haven't seen anything from his main address yet. But like I say, I'm not the stats guy. Maybe he's responsible for all of it.
It could be.
No, like that's actually really interesting, because like I don't know if you knew, but like Frax, for example, is notorious to like somehow always like know what to farm early and hold and they did it with CVX, and like that's why I'm kind of glad Keith went that direction. Is you don't know, maybe they put a couple million to farm the IFO, and they're slowly becoming like a big power in your ecosystem.
Yeah,
That's
and I
something
mean,
to keep in
there's
mind.
like that risk exists with every token voted protocol ever, basically, right?
Yeah,
Like
of course.
there's always there's that risk exists kind of universally, but the hope is that there, if the tokenomics are crafted such that there is really good alignment between what benefits the token holders and what benefits the users of the protocol, then in theory, it shouldn't matter if somebody holds a lot or a little if their incentives are aligned with the users, right? That's the name of the game of tokens, is you're trying to connect the incentives of the people who are owning the protocol to the people who are using the protocol, right? And the different players there. One of the things that I suppose we could look at, one of the few sort of nitty gritty details I look at is I kind of keep an eye on the transaction feed and balancer. And there a few addresses have kind of emerged there as being in accumulation mode, and actually that number is getting more and more different addresses are kind of they're bottom fishing, right? Anytime, because there are some people who are farming CTR and in smaller amounts and selling it into the balancer pool, and there are equivalent people who are there kind of ready to scoop up so far to sort of stabilize the price at this premium that we've seen over aCRV. And as I mentioned, I think that there's an argument to be made when I was talking about like liquidity in CTR, whether it's whether we move up or not. There's an argument to be made that like the biggest like the highest leverage period of the IFO, like the point at which there is the smallest amount of CTR in the market and the most opportunity to sort of have bad actors come in and manipulate price, we are kind of through that now. And so I think that, again, not saying one way or the other how these discussions in the community are going to pan out, but I think that you could make the argument that deepening liquidity for CTR, even though it is a change and a risk in that sense, deepening liquidity for CTR doesn't have the same risks as if we had started with that deep liquidity, right?
Yeah.
And we've kind of been through that that danger period now.
That's awesome. Okay. All right, let's finish here. No financial advice, but why should people not be involved in the IFO, or anything else you just want to talk about to close us out here? Things people should be aware of in your community, ways to get connected, Twitter accounts to follow. Close us out here on all the goods that people need to know.
AKA
All right,
show
so
whatever you want to show.
I'll do some mild chilling. I would say anybody who sees the potential of Concentrator, the potential of farm and hold versus farm and dump, I would encourage you to look at the IFO and think about farming it properly, and joining our community and helping us to grow that story, and to see if we can get that meme, that farm and hold meme, to take hold, because it just seems to me at least, it just seems so much obviously better. And this is our way to help make that a reality, and to lock down a piece of a protocol that has some pretty big plans, some pretty great traction, and some real revenue, and no secrets or tricks, tokens waiting to be dumped in the background. So that's what I will say about the IFO. Check it out, because look into it as deeply as you want. You won't find any tricks there, and I think that it's a pretty nice offering. I would say also there is a small allocation of CTR tokens that goes to what we're calling the booster program, and I know that you guys are actually already nominees in the booster program. I am also a nominee in the booster program, and basically what this is, it's pretty simple. 3% of the CTR tokens, 3% of the total CTR tokens, are going to be awarded by a VE community vote after the IFO. It's that easy. And the principle here, the idea is that people who help out during the IFO, they help to, they talk about Concentrator, they educate the community. Basically people who get involved in a positive and productive way in Concentrator and in a way that's visible to the community, theoretically are going to be rewarded during that token vote. And so anybody who is helping out with educating like threads or videos or in the Discord, on Twitter, all of that kind of stuff, we're going to try to capture all of those names and have them on a snapshot ballot, and then have this vote at the end of the IFO, and to just basically straight airdrop a proportional share of that 3% to everybody who's on that vote.
So Alejandro, when we win all 150,000 CTR, we have to give like maybe 500 each to Crouguer. You agree?
Well, I mean, if you guys are farming CTR, you could just vote for me. Like that works too.
Gotcha. Okay. I don't know. I think we just want to win it all, and then we'll get the airdrop and then just give you a little bit. How about that?
Okay. I mean, I guess beggars can't be choosers.
Oh my god. Or if anything, I promise you we'll be good Samaritans, and we will lock the tokens and use it as passive income for our cause. Don't worry. We're not gonna be sell pressure, at least.
Sounds good.
Anything else people should be aware of?
I would say, the IFO is going strong right now, so check that out. But the very next thing on our list is a big push for Clever, like we talked about early in the podcast, and there's going to be we're going to be going through a similar but not the same process, quite actually different process for a token for Clever. And as we've seen during the unlockening, Clever has got pretty awesome traction, and a lot of people seem to have bought the vision that we are of taking leverage on CVX farming. And so there's going to be a lot of exciting new stuff coming for Clever when the IFO is done. But in general, come by the Discord. We're always hanging out in there. We're happy to answer any questions that you have. There's endless there's wonderful tweet threads and articles, and we can point you to a lot of them at the Discord that kind of talk about Concentrator in any level of detail that you like, as well as Clever, and you can get a sense of where we're going and join the party.
Awesome. Well, Crouguer, really, really appreciate your time today. This was a lot of fun. Always enjoy chatting with you.
Yeah, it's so much fun to be here, guys. Thanks very much.
KingMaker Podcast.